Every now and then you get a week in the market that just feels like it has a complete split personality. Well, this was one of those weeks. We're talking about some serious volatility, a wild back and forth where it felt like every single day was a battle between two totally different versions of the future. I mean, just take a look at these numbers. It's a total roller coaster. The week kicks off with a massive rally on Monday, then slams on the brakes Tuesday. Wednesday, we get a nice little rebound, only for Thursday to come along and just wipe it all out with a huge sell off. It was just chaotic, and you can bet investors were left scratching their heads, wondering what on earth was really going on. So, what was causing all this madness? Well, it wasn't just random noise. This wild ride was actually the result of two huge opposing forces that were locked in this epic struggle, this tug of war for control of the market soul. All right, so on one side of this tug of war, you had the bulls, and they were being fueled by this incredible, almost unstoppable optimism around the artificial intelligence boom. This wasn't some minor subplot, this was a tidal wave of money and conviction. And look, this bullish feeling was built on some really solid ground. It wasn't just hype. The week was absolutely packed with real, tangible announcements. We're talking huge investments and major corporate moves that screamed the AI revolution wasn't just coming, it was accelerating like crazy. And the scale of the money being thrown around was just staggering. For instance, JP Morgan announced a plan to pour $1.5 trillion into national security sectors, and they named AI as a core piece of that. I mean, that kind of capital doesn't just nudge things. It reshapes entire industries. And it wasn't just ideas, it was the plumbing, the actual infrastructure build-out that was getting funded. A group led by BlackRock and NVIDIA dropped $40 billion on a deal to buy a data center operator. That's the backbone of the AI revolution, and the investment was just massive. Of course, all this optimism was totally infectious on Wall Street. HSBC came out with a brand new price target for the king of AI chips, NVIDIA, setting it at $320, a new high on the street. It just goes to show you how much confidence investors had in the future of AI hardware. And this wasn't just one bank's opinion. You had giants like UBS out there forecasting this unprecedented boom. They called it a once-in-a-decade memory supercycle. So yeah, the bullish story, it was powerful, and it was really compelling. But you know how it goes. For every action, there's a reaction. And pulling hard in the other direction was this potent mix of old geopolitical worries and a sudden, really terrifying new economic fear. This was the bear case. Now, this bear case was kind of a two-headed monster. First, you had the old classic, the US-China trade conflict, which was simmering and decided to flare up again. But the second head was something that felt way more immediate and scary. Brand new fears about the health of the banking system, and the dreaded words, credit crisis. And what really set the stage for this fear was this unforgettable warning from JP Morgan's CEO, Jamie Dimon. He was talking about early signs of trouble in credit markets, and he used this cockroach analogy, basically saying that if you see one little problem, it probably means there's a much bigger, uglier infestation hiding in the walls. And wouldn't you know it, on Thursday, after a week of these two narratives battling it out, that ominous warning suddenly felt very, very real. Investors saw exactly what they had been fearing. Okay, so this brings us to the climax of the week, Thursday, October 16th. This was the day that the unstoppable force of AI optimism ran smack into the immovable object of credit fear. And the day started out so well for the bulls. The AI chip giant TSMC reported fantastic earnings, which seemed to confirm that whole AI supercycle story. But then, in the afternoon, the cockroach appeared. A regional bank, Zions Bancorp, came out and warned about major loan losses. And that was it. Panic just took over. By the end of the day, that morning's optimism felt like a distant memory, completely swallowed by fear. The numbers here really tell you everything about the psychology of that day. The S&P 500 actually had a pretty modest drop, just over 0.5%. But the VIX, Wall Street's fear index, it absolutely exploded, jumping 22%. That's not a rational market repricing. That is a massive spike of pure, raw fear. And the reaction was a textbook flight to safety. Investors couldn't dump risky things like stocks fast enough. They ran for cover, piling into things like gold and U.S. Treasury bonds. With the VIX hitting a 4-month high, it was official. Panic was in the driver's seat. So, after a day like that, where does the market go? Well, that Thursday sell off completely changed the conversation. The market's focus snapped away from AI growth and locked onto just one thing. How bad is this credit situation, and is there anyone who can fix it? And in moments of intense market fear like this, all eyes inevitably turn to one place. The one player on the field that might just have the power to calm the storm, the Federal Reserve. So, in response to all this fear, the Fed started sending signals that a big policy shift might be coming. They started talking about ending something called quantitative tightening, or QT. Now, in simple terms, QT is just the Fed's process of sucking money out of the financial system. So by hinting they might end it early, the Fed was basically saying, hey, we see the trouble, and we're ready to turn the money spigots back on if we have to. And the market's expectations changed practically overnight. Totally spooked by these credit fears, traders immediately started pricing in a big cut from the Fed. We're talking 50 basis points, or a 0.5% cut. That's double the standard size. The market was basically screaming for a rescue. And so, after a week that gave everyone whiplash, the market was left right back where it started, facing the same fundamental conflict. Only now, the stakes felt so much higher. It all comes back to these two competing stories. On one side, you have the AI boom, a story about incredible long-term structural growth and a technological revolution. And on the other side, you have the credit bust, a story about immediate systemic risk and just plain economic fear. These are two incredibly powerful narratives that just don't seem like they can exist at the same time. And that leaves us with the final critical trillion-dollar question. The AI boom is real. The credit fears are also very real. But both of these stories can't be the main driver forever. So which one is going to win this tug of war? Which story will ultimately define the market's future? That was the question on every single investor's mind.